Is energy a winning sector for 2012, or will it run out of steam? So Stephanie, many analysts say that they're kind of equal weight, underweight energy going into 2012. Wells Fargo in particular says that consensus expects that earnings will grow only about 3.5% for the whole sector, especially as 11% of energy sector sales come from Europe. Do you agree with those kind of estimates, and do they worry you?
I think the numbers that you have to focus on really are the supply demand. Right, and then you have to look at where do you think that oil WTI is going to trade in a range. It's not going to be. It's impossible to predict, right? So we kind of think that 80 to 100 is where the WTI price will be in 2012, and at that level, even at 80, these companies are cash flow machines, and they will be able to continue to invest and find oil and drill for oil, and that benefits these companies.
What's your favorite one?
My favorite one is Apache. It's actually, and the reason is because it's the cheapest. It's still $30 from its high, and it also has the fastest growth for I think 2012 and the next few years. And the reason is because they spent $10 billion on acquisitions last year, and they really improved their portfolio. They've got a great mix of gas and oil projects globally. They've got great customers, and I think that at the end of the day, these acquisitions act as a buffer to earnings because you have these synergies. So I think that they can really decide where they want to focus on around the world, depending on what crude oil prices are doing. So
then in terms of integrateds, if we see crude stay between $80 and $100, would you be focusing on the dividend-heavy ones like an Exxon or Chevron or Conoco?
So, there's kind of two schools of thought there. They're safe, and you get to play the commodity theme. I think that kind of is an oxymoron, honestly, because, they're still going to be very volatile, whether they have a dividend or not. So, in my opinion, if I think that oil prices are going to stay firm, 80 to 100, you want to own the company that has the most exposure to the underlying commodity, and that would be Hess.
All right, and then you also have three other picks. It's Ensco, kind of off the beaten path, Schlumberger, biggest oil services company in the world, and Fluor, an energy, engineering and construction company that's particularly levered to the oil price. Which is your favorite? How would you rank them?
Well, I would say that Ensco is definitely my favorite, right behind Apache. I like also Schlumberger, and the reason I like the two of them is really because they have focused on the deep water market, and the deep water market has clearly been firming. The jackup markets have been tightening. Prices are going up. Contract lengths are expanding. With Ensco, they've got the Pride acquisition, so you get some synergies there. Schlumberger, I like that one as well. They've got the Smith International acquisition, so they too have a kind of a somewhat buffer, but both of those stories I like a lot. And then Fluor is just kind of a strange one-off kind of name that you get exposure from their backlog, but I do think that as long as Brent stays above 80, projects will be happening, and that benefits the largest E&C company in the world.
All right, thanks, Stephanie. I appreciate it. That's 5 energy stocks for 2012.